Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar, with me Sonal Bhutra, and these are the top stories. Stocks clock gains following a dovish speech by Powell and no surprises from RBI. IT financial see some gains, realty energy drags.
The MPC was of the view that further calibrated monetary policy action is warranted to keep inflation expectations anchored, break the persistence of core inflation, and thereby strengthen the medium-term growth prospects.
The Reserve Bank of India hikes interest rates by 25 basis points, with 4 of 6 members voting in favour, even as it pares inflation forecast and ups growth outlook, but keeps its stance of withdrawal of accommodation unchanged.
The Indian banking sector and the NBFC sector continue to be resilient and strong.
RBI says the banking and financial services sector remains resilient, adds the exposure of banks to the Adani Group shares is insignificant.
Paytm gains after reporting strong loan growth in January, even as analysts cut loss estimates. Zomato too climbs after the founder signals a move towards profitability, and analysts hope for a good Q3 report tomorrow.
Adani Group stocks gain on management sharpening its focus on deleveraging. Adani Ports looks to pare 5,000 crore of debt even as it maintains FY23 guidance and offers an outlook for next year.
Okay, all right. Those are the top headlines that we are tracking on Midcap Radar for the markets at the day's high as we speak. So it is a gain of 160 points on the Nifty. We have the Midcap Index, which is also surging up around 250 points, with Sensex at 60,745. Banking names, they have come off from the highs, and that index is actually underperforming the benchmark, but still that is sitting with gains of 89 points. We have Adani stocks which are doing well. A good comeback is what those stocks have made. So Adani Enterprises up 14%. We have Adani Ports, which is sitting with gains of around 8.5% after the commentary on their conference call as well. And generally, we are seeing some comeback across the board as well. ITC too should come up for you on the screen. So that stock has surged to the day's high, and these are a couple of names which are doing well. But of course, the big story remains the RBI hiking that 25 basis points rate hike, largely in line with what the street was working with. But yes, the earnings fine print that we have been getting and moves from the US markets as well, all of them is something which is getting digested by our own market streamer.
Absolutely. Let's talk about the market technicals. Sameet Chavan is now with us on the show now. Sameet, very strong day so far, right? We're practically at the high point of the day. The Nifty almost went to levels of 17,900. What have you made of the day so far, and does it open up more upside?
See, market is trading at a crucial juncture now. 17,900, 950 has been acting as a very strong resistance in last couple of weeks. And it seems that, the Adani fiasco is over now. And from here on, market has already digested it. And from here on, 17,350, 400 seems to be a strong base. And any dip from current level is likely to get bought into. But, from a momentum perspective, we need to have a breakout. So breakout beyond 18,000 would be quite crucial. And now we are, approaching that important cluster of resistance, 17,900, 18,000. So we would be keeping a close eye on this, important level of 18,000. The moment we, get a breakout beyond 18,000.
All right. So that is about the market.
Northward trajectory.
Okay, Samit. So that's about the benchmark indices. Tell us about your individual technical picks. What are you suggesting here?
See, at current level, we like Dr. Reddy. The entire pharma space has been a laggard, but Dr. Reddy is the one stock that has been, picking some sort of momentum in last couple of months. So if we look at it, recent price action, stock has already broken out from its recent hurdle. The volume action has been quite good. So we expect this stock to, move higher. 4550, 4600, these are the next level to watch out for Dr. Reddy. Any depth from current level would be a good buying opportunity. And around 4430, one can now keep a strict stop loss. Apart from this, we like mid-cap IT counters. IT, space has started chipping in. Mindtree is the one stock, LTI Mindtree. So that stock certainly looks positive. It has come out of its recent concession zone. So from here on, the target would be somewhere around 4850, 4900 with a short-term perspective. One can buy at current level and keep a stop loss somewhere around 4640.
Thank you very much for that. Another stock that we were looking at is Dreamfolks. Very strong performance in Q3. The revenues have doubled, 204 crore of a top line, which compares with 98 crore in the same period of last year. Net profits too have gone up from 6.2 crore to almost 19 crores. So doubling of revenues and tripling of the profitability. We'll slip into a break on that note. We'll come back with more. What has India's largest lender, State Bank of India, made of the RBI policy? Let me go across to my colleague Lata Venkatesh, who's with the management of State Bank of India. Lata.
Okay, thanks for that. And Mr. Khara, thank you very much for joining us. Well, first up, obviously, rate hike for lending. Do you think in the banking sector there will be another quarter percentage point rise in deposit rates?
I think much of it will depend upon the asset liability situation of various banks. It need not necessarily lead to quarter percent, but yes, of course, I expect that there will be some increase, and certainly those banks which are really clamoring for more and more deposit because of the kind of growth which they are seeing on the asset book, perhaps you will get to see an increase in deposit rates from such banks.
Okay. So more generally, how should an investor in State Bank understand that margins can still improve because of this rate hike, or do they plateau from here on?
No, I think I expect that there is a scope for improvement in margin, because invariably we have seen that repricing of deposit happens with some lag, while repricing of loans happen with a shorter lag. There is a lag there also, but it is a shorter lag. So I think I would say that it will certainly, with this policy rate increase, the margins, I expect that it should improve.
Okay. Now with the benchmark rate, repo rate becoming 6.5, there will be a concomitant rise. And do you expect the spreads of corporate lending over sovereign to increase? And do you expect any impact on the volume, on the demand?
No, I think, see, what will happen is that normally this depends upon the quality of loans also. So if at all quality of loan is good, then perhaps the rates would be lower. So the risk premium is something which gets adjusted. Of course, the base price is whatever it is on account of the yield curve, which will be now evolving post this policy rate increase. So I think based on and for better quality interest, risk, the risk premium would be lower. So it is not that it will have a universal impact across the book and across the risk also.
Okay. Well, I don't know if you... Okay, got that. I don't know if you heard the governor. We had asked him questions about exposure to the Adani Group, and he did say, he reiterated the comfort he had in the previous press statement. You've also made your statement. But the question to the governor, which he didn't answer, which he obviously said belongs to the banking sector, if the international bonds are not rolled over, they will ask for refinancing to the Indian banking system. So will you be comfortable increasing your exposure?
See, as of now, it is only a conjecture. So we'll cross the bridge when we'll come to it. And all of us have seen that yesterday itself about 1.1 billion worth of loans have been liquidated by the group. So I think we should, I don't know whether the group will approach us or not. Even that is also anybody's guess. Okay. I think people are perceiving the eventualities which are not yet known. So I think more important is that, as I mentioned in the past also, whatever lending has been done by banks like us, one, this is a very, very small component of our total loan book. Second, this is all supported by physical assets, cash generating assets, and we have never seen any default in the past. And even for that matter, they have not availed full limits. So that's a very clear reflection about the group being liquid. So I think that's how I read the situation.
Fair point, sir. Just one more detail. In the results conference, you and your colleagues said the exposure is about 0.8, 0.9% of your total book. If you can tell us a number, and more importantly, what are the non-funded exposures? There were some fears in the market that sometimes when global banks give loans, they often ask for a performance guarantee or some kind of guarantee from an Indian bank. Do you have any such guarantees?
I would say that I normally don't discuss about group in particular, but I will only give one broad statement that whatever you have in mind in terms of foreign bank having taken some guarantee from us, none, nothing like that.
None like that. Oh, actually that's a very big reassurance for those who hold banking stocks and for those who own the Adani Group stocks as well. Thank you very much for that.
Non-fund based,
now a more general question on the
non-fund based limits are only for non-fund based limits are only for the purpose of their economic activity which they are pursuing and nothing other than that.
Okay. Fair point. Got that. Thank you very much. So that's a very, very major clarification. You do not know how many ruffled feathers you have smoothed by that assurance. Now, I just wanted your overall comment. I don't know how much time you had to either hear the governor or read the contents of the press conference. There have been some advice to banks or other directions that penal charges shouldn't be too high. There are also some more facilities given for insurance for MSMEs on the TREADS platform, and several such, insurance companies can do lending and borrowing of government securities on the CCIL. Those directions also will come. Any overall comment on the policy?
No, I think overall when it comes to the policy action, which is essentially in terms of the penal interest, etc., that I think is a very welcome suggestion because it will bring in order, and it will be all for the benefit of the system as well as for the borrowers, because they want that there should be some there are going to be extant regulatory guidelines which are expected to be reviewed by RBI relating to the penal interest. It's a very welcome suggestion, and it will bring in some rule-based order across the entities in respect of penal charges. The other very important aspect is the regulatory initiatives on the climate risk and the sustainable finance, because there is now some kind of framework for accepting the green deposit. And apart from that, the disclosure framework on the climate-related finance also is a very welcome suggestion. And the guidance on the climate scenario analysis and the stress testing, this also will go a long way in terms of Indian banks to build up this kind of a book. The other very important component I would like to mention is relating to the factoring entities are also permitted to participate as financiers on the TREADS. Because, TREAD is something which is going to go a long way in terms of addressing the receivable related challenges which the SMEs face. So I think this is a very big enabler, and it will will now permit secondary market operation will also now be enabled on the TREADS platform. So this is again a very welcome suggestion. So I think welcome initiative which has been taken. So I would say that overall there are many enablers which have been created through this policy. Actually they are very forward looking, and they will go a long way in terms of addressing the climate related green financing and the SME stress, and also overall stress in terms of the penal charges which our customers face. Now there will be a much better policy structure for that. So this will actually take away the arbitrariness on the penal charges, and also the security lending and borrowing in government securities is again a very welcome suggestion, because actually many of the entities were not actively participating into the traps. So now through this mechanism, even that can also be brought in, and it will perhaps generate more liquidity in the system also. So that's how I read the policy statements.
Fair point, sir. I think that's a great op-ed piece that you have spoken on the policy. It is a many splendored policy. Thank you very much for joining us, and I want to alert our viewers that we will be hearing the chairman as a part of many other equally eminent jurors who will be speaking to Shireen Ban later on in the day. The India Business Leader Awards jury meeting is today, and all of you will get to hear the opinions of the jurors on the Indian economy. We will go into a break on that note. Okay, I'm sorry, not into a break. It's over to you, Reema.
Thank you very much, Lata, for that. It was a great conversation, lots of insights, but need to get into a break. And as we do that, here is some exciting news. The most coveted leadership awards are back. CNBC TV18 honors the visionaries behind the outstanding businesses. Catch the most influential, credible, powerful IBLA jury this evening, right here on CNBC TV18. Welcome back. Let's get a corporate conversation going. Mrs. Bector Food Specialty stock is at a fresh 52-week high. Strong earnings. Anup Bector, the managing director, Mrs. Bector's Food Specialties, is now with us on the company, on the channel now. Afternoon, and thanks for joining in. Let's talk about the biscuit business. 40% top line growth. How much was volume led and how much was pricing led?
This was, on the pricing side, we have been continuously taking price rises over the year. I mean, the price increase for the raw materials was very instant. So effectively, we have taken a price rise of around 8 to 10%, and more has to come in because it's still in the pipeline. So the rest comes in from the volume growth.
Okay, so around 30% from volume growth and around 8 to 10% has been your price growth. You said
there is also a link of volume, premiumization, price rise, so everything put together we do 40%.
Okay, so you also said you're expanding your presence in existing and new geographies. That is something that you've been focusing on as well. Can you tell us how much of your revenue growth came in from expansions and how much was increased sales in the same region for you?
So this has been a very, a good thing for our company that we have increased our distribution. So our distribution, which is our direct distribution, we have increased it from 1,60,000 outlets, and we're taking it to 3,20,000 outlets by, March 24. And the progress is very much on. We have increased our feet on street people to around 900 today. We have also introduced SFA, where, which is about measuring people, training people, guiding our sales force on increasing premiumization, getting better results. So it's a result of, higher distribution where we are getting this, the higher volume growth. The majority of the volume growth does come from the existing areas and not from the new areas.
Okay. You said there are more price hikes to go.
Sorry, say again.
You said that we could see more price hikes. Could you elaborate a bit more? How much more? How are raw material prices tending for you?
Price hikes could be another 2 to 2.5%, 3%, which was in the pipeline. There was a delay from our side, and which will come in for the company going forward, probably within this quarter. It shall come.
Okay. So that also takes me to the next question, that is on raw material prices. Wheat is at a record high. You are talking about price hikes as well. But generally, what kind of margins are you looking at, both on the gross margins front and the EBITDA margins? Because you do have aspirations of 15%. By when will you reach them? Because it's still lower than that level.
Yeah, so our aspirations have always been around 14%. That's what we've always conveyed to our investing community. And we stick to that we will target a 14%. We are today, coming close to 14, but we will target for the next quarter, the 14% EBITDA.
14% in next quarter itself is what you're targeting?
No, we will, when the quarters going forward, not only in the next quarter, the quarters going forward, we'll target a 14. That's what our target is. And, let's see how it comes out. But we are well placed because the raw material prices are also a bit softened than before. We have wheat coming in the next quarter. The Indian harvest is going to be coming out. So 14% is what our target is.
Any target on gross margins? And that leads me to your thoughts on advertising spend, because you are expanding your direct distribution outlets. You're looking to double it. Will that be accompanied with an increase in ad spends?
Yeah, so on the ATL side, we have started spending in the last quarters, our spend was much lesser. So this quarter, the spends have been much better. So on the ATL side, our spends are around 2% of our sales. But on the BTL side, which we are supporting our brand on due to increased distribution, we spend around 6%. So, this is effectively proving good to us at the moment because we have seen a very rapid growth numbers coming in to the company. So we'll continue the same pattern for some time.
Okay. All right. Mr. Bector, it was a pleasure speaking with you. Thank you so much for joining us. The street likes the numbers. The stock is at a 52-week high. So that's the word coming in from the company as well. The stock high by 0.5%. But for now, it's a wrap on this edition of Mid Cap Radar. Stay tuned. Your stocks will take all the action ahead.